Unlike previous bull runs, the last one being from 2000 to 2010, which lasted a decade, I think this one probably has no ending until we have a new monetary system. So I think this is the final run, but it's not a final run where you can say it will hit a certain price. It keeps going until we don't have the currency which we use to buy gold anymore, and that effectively means that if you ask what the price will be, you'll be asking what the price will be in what will become eventually a defunct currency.
This is Kaiser Johnson with Liberty and Finance. With silver's recent spike higher, if you're needing to raise cash, Miles Franklin stands ready to buy your silver at highly competitive buyback prices. Also, with a high spot price and still low premiums, it's a great time to swap from silver bullion into silver eagles and junk silver. And finally, we're also happy to swap your gold into silver while the gold-silver ratio is still high before the silver train leaves the station. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Clive Thompson, a retired Swiss wealth manager. Clive, thank you so much for joining us today.
Good evening, Elijah, and thank you for having me back on your show.
Definitely. Well, it's exciting times as we still see silver here on June 9th breaking through the $37 level. We haven't seen prices like this for 13 years. Your take on what we're seeing?
2 or 3 days ago, as it touched the $35 level precisely, within seconds, I'd got a message out on LinkedIn to all my followers. I've got about 15,000 followers saying silver has just broken the $35 level a few seconds ago. And this is the level that everybody has been watching because we've all been waiting for it to break $35. And when it does break $35, psychologically, everybody's turning bullish and buying it above the $35 level. And I wrote that about half an hour later, when it was at $35.50, I wrote it could get to $36 pretty quickly. And I think we did that the same day, if not the following day. And now we're pushing on $37. I'm seeing on the futures $37.01. I imagine it's slightly below that on the spot market. So yes, Stuart, what do I think is going to happen? I think we're in new territory. I think it will go a lot higher. I've been talking about the supply deficit of silver, where less silver has been mined for several years than is being used in industrial uses. The biggest increase of use in silver is from the electrical industry, where consumption of silver continues to rise rapidly because components in electricity are getting smaller and smaller. So that doesn't actually mean you need less silver. It actually means you need more silver, because the smaller the component, the more reliable you need the electricity conduction to be. And so silver is going into more and more products, micro products, to ensure that they're reliable. And in some cases they're putting gold, but that's another story. That's not affecting the gold price. So we're in a situation where that deficit of silver globally is set to continue rising as mine production continues falling, consumption continues rising, widening the deficit, and that difference has to be met from recycling. So whenever silver has a spike, the recyclers will always come out of the woodwork. You know, people with coin collections, bar collections, silver candlesticks, they will turn up and they will try and sell some, but usually there's a bit of a lag. So I think we probably do continue a little bit higher for a few days before we get to a pause. Will we touch $40? I think there's probably about 30% chance that we could do it in the next couple of weeks.
I mean, we're just $3 away from there. We just saw a $3 move. So it's definitely exciting as we see silver rise here. What about gold? It seems like gold isn't moving too much. And I'm kind of surprised, as they normally move pretty similar to each other. But we've seen quite a disconnect over the last couple months between gold and silver.
Well, whilst we've seen record central bank buying last year and also at the start of this year. We saw yesterday, as China brought out its numbers, that they've been cutting back on their gold purchases. I think it's the number of ounces they bought in the last 3 months has gone down from 160,000 to 90,000. Then I think it was 70,000. I think the latest one is 60,000 this month, in the month of May. Now, it could be that they're just showing price sensitivity. You know, it is at an all-time high as far as the Chinese are concerned. Or it could be that they are buying a lot and only telling us about a little bit they're buying to kind of store some silver under the table so as not to spook store some gold under the table so as not to spook the gold market, so they can keep acquiring gold. If we do have another type of Bretton Woods agreement forced on us by some sort of currency meltdown, distrust of the currency, then whoever's got the most gold will be calling the shots. And you kind of want to have something in reserve which you're not telling everybody about. So it could be that China's secretly acquiring gold, which we don't, I can't say they are or not. There's a lot of speculation they are. But right now, with the official numbers showing they're buying less gold, that's obviously making the market sit back and say, well, perhaps they're not going to buy any more, or maybe they'll buy less. But I think gold remains well supported, nevertheless.
When it comes to gold and silver, the narrative I've been hearing over the last few years is that a lot is being taken off of the major exchanges, and we've talked about this as well. Can you give us an update on that as we're seeing silver break through the $37 level here? What are we seeing on the COMEX at the LBMA with respect to the outflows for both gold and silver?
The delivery notices in them, I haven't got the latest numbers for June because I haven't looked at it yet, but the delivery months in the months of January, February, March, April, and May for gold and silver, actually, were massively ahead of the same months in the previous year. In fact, by mid-May, the number was 700% above mid-May, or not the whole of May, for the previous year. So that was the 100-ounce bars of gold, which are, if you like, $350,000 or $330,000 each. So somebody is taking huge deliveries of 100-ounce bars, which was never, that sort of level of delivery was never seen before, because traditionally COMEX was a futures market where people would get to the spot month and they'd roll their spot month into the future, whether they were long or short. For those institutions which were short, such as bullion banks and so forth, the way they would play the game would be to own spot gold, and sell it 3 months forward or 1 month forward, where you get a premium price. And then, because they've got the gold at the spot level, as the gold they've sold on a forward basis reaches the spot month, they then resell it for 3 months forward, continuing collecting what's called the contango. The contango is the difference between the spot price and the future price. The future price generally trading at a premium to the spot. So that was the kind of market it was. But something changed this year, from about January this year, when people started to take, instead of rolling their contracts forward, they were taking delivery of that gold and removing it from the exchange. Why were they doing that? Was it that somewhere back in the shadows there's a major buyer? And if so, who is it? We don't know. I mean, there's lots of speculation as to who it could be. And I can throw a few names around just saying it's speculation, but there is no plausible rumor as to who it could be. But it could be a foreign government who's acquiring gold because they don't have enough. Or let's say Mexico or China, for example. Well, probably not China, because China would buy through London, I think. But let's say Mexico or Canada. Maybe it's Berkshire Hathaway. I think that despite what everyone thinks that Warren Buffett thinks about gold, he does come from a background with his family, his parents' family, who were sort of very much in favor of gold and very much against America going off the gold standard. And of course, Warren Buffett has had his forays into silver. Now he's retired and there's a new guy in charge, so we don't know that. But obviously he could have been a big buyer of gold. Then who else could it be? Well, it could be some people have mooted that it might be the US government itself acquiring gold, because perhaps the US is going to go back onto a gold-backed dollar. Obviously, it can't be a gold-backed dollar at the present price. It would have to be a gold-backed dollar at a much higher. The price, the historical price was $42 ounce. It can't go back on $42 ounce, but it could go back at $3,500 or $4,000. But that doesn't mean to say it would go back onto a gold standard where everybody can turn in their dollars and get gold. They wouldn't have enough. So what would they have to do if they go back onto a gold standard? They'd have to go back onto a gold standard with a gold-backed dollar, whereby the ability to convert your existing dollars into gold-backed dollars is severely restricted. You might be able to convert $500 worth or $1,000 worth or $10,000 worth, but there's no way you could convert all the dollars which exist into a gold-backed dollar because it just isn't enough gold. But obviously if they got more gold, it would mean that everybody could convert a little bit more old dollars to new dollars, and that would be some sort of currency reset. If they did that, of course, it would solve the national debt problem, because the debt would be left behind in a currency which is no longer allowed to be used in the economy, because they'd be forcing people to pay their taxes in gold-backed dollars and shopping in gold-backed dollars and everything else. Now, I'm not saying that's going to happen. It's just a speculative theory. I mean, it could be we might get another currency in the form of central bank digital currencies. We might get ration coupons. That's a kind of another currency as well. We don't know what's coming, but at the end of the day, the fiat system that we're in today, where governments are piling debt upon debt, cannot continue indefinitely. And at some point, buyers are going to get indigestion, and it will. Then we have to see what happens. I mean, there's lots of theories about what happens next, and none of them are good for the holders of debt. None of them are good for holders of fiat.
And we have talked about kind of what would a reset look like for the average person and going forward here. It seems like maybe that's one of the reasons why we're seeing gold and silver rise so much, as you mentioned, fear of debt around the world and not just in the US. I did want to ask you, however, though, about other commodities that are also rising at the same time. You spoke about, actually you wrote about on LinkedIn, platinum breaking above $1,000 just, last week or so. Now it's $1,200. So we're seeing a very fast move here in platinum as well. And I think a lot of people watching, I myself have been waiting for platinum to move. It's been very sluggish over the last couple of years, but your take on this recent move in platinum that we've seen.
Well, I'm very thankful for the very rapid 20% profit we got in the last week. That was quite nice. Platinum is in a similar situation to silver, and to some extent it's been dancing to the tune of silver recently. Now, it's been a much worse performer than silver long term, but what I have noticed is when silver spikes up, platinum tends to spike up on the same day. So clearly precious metal buyers are out there, and I read an article somewhere that in China, many buyers or some buyers are now turning to platinum as an alternative to gold because they feel that the gold price has risen so much. Platinum is a precious metal. It used to be double the price of gold. Now it's less than half the price of gold, but it's still a precious metal, and it's much, much rarer than gold. So the theory by the fans of platinum is that at some point it will see its day again and go back to its old norm of being, throughout all of history, it traded at a higher price than the price of gold. Well, we'll see if that happens, but certainly the move we've seen in the last few days of a 20-odd% rise in the price of platinum and almost no move in gold is kind of saying that it's trying to play a bit of catch-up now.
I think it's about time for catch-up. Yeah, I mean, as you mentioned, platinum typically has traded above gold's price, but it's almost a third of gold's price at the moment. If we do look at, though, it seems like one of the main reasons why people are buying precious metal right now is because they're concerned about the currency, they're concerned about debt, and all of that. So I did want to get maybe an update from you on that, as we see, for example, President Trump trying to push through this big, beautiful bill, this whole idea of reining in spending with Doge and those initiatives. It seems like that is maybe out the window now, and the path forward is just more spending, more money creation. Your take on that, and what is the end game for all of this?
Well, this is the consensus that they've thrown all austerity measures out of the window, and now it's spend, 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 as if they won the lottery, which obviously means the debt will go out of control faster than would have happened otherwise. But you only have to look, before all this happened, just look at if anyone has the time, go to the Congressional Budget Office's numbers, and the latest forecast you'll see, the official forecast that they do for the budget going forward for the next 10 years, is from January 2025. So in January 2025, they made their forecast for the next 10 years, and this shows the debt to GDP ratio rising. What that means is the national debt will rise at a faster pace than the gross domestic product, or faster than the economy. So it's a bit like a family, your salary is rising by 1 or 2% a year, but your credit card debt is rising by 10 or 20% a year. It's just getting bigger and bigger. And there comes a point where it becomes completely unsustainable. So when you look at the CBO's forecast as it was in January, it showed the debt to GDP ratio rising from, let's call it for simplicity, 100% to 150%. I mean, those aren't precise numbers, but it's a huge rise over the next 10 plus years. And a number of the numbers they've got in there are fairly conservative. When I say conservative, that they're conservative in terms of this is the best case scenario. They expect there should be no recessions, no natural disasters, no wars, no pandemics, no crises, no unemployment, rise in unemployment. Nothing. There's going to be nothing which will tilt the figures negatively. So if we would have, for example, another pandemic, of course, tax receipts will go down and spending will have to go up. If there's a natural disaster, same thing. If there's a war, same thing. So the assumptions will be none of those. And the other assumption which is being made, which I find rather adventurous, is the assumption that the interest rates that the government will pay on its national debt will be about 2.8%, rising to about 3.3% in a decade. Yet the cheapest interest rate you could get as a government now, the US government, is about 4.4%. So if you factor in these higher interest rates, that debt to GDP ratio accelerates at a faster rate than the government's was predicting in January. And of course, they have said if this tax bill goes through, they'll have to revise the figures again, and it's going to add, and I've done the maths on this, it's going to add really $500 billion a year to the deficit, which should this year, which ends in September, this is the fiscal year, should be 2.1 trillion this fiscal year. That's going to go up to 2.6 trillion deficit. What does that mean? It means the debt gets bigger by 2.6 trillion. How much is that as a percentage? Well, if you take the debt at 36 trillion, I think that some of that's debt owed by the government to itself and internally. If you take it 30 trillion, it goes up by 2-point-something trillion. Well, that's about 7-8% increase in the debt in the year. Now, the economy isn't growing that fast. The economy is growing by 1 or 2%, if at all.
Now, if the debt continues to increase faster than GDP, I mean, this is obviously not sustainable in the long run. Japan, though, for example, has GDP, I think, over 200%, or debt to GDP over 200% right now. So it seems like at least Japan has survived for quite a while with major debt issues. But how long do you think the U.S. having the world reserve currency, right, how long can the dollar survive with debt significantly above GDP?
So, Japan has the advantage that most of its debt is owned domestically, and most of it is owned by the BOJ, the Bank of Japan. And the Bank of Japan, through its ongoing purchases of government bonds up until a few months ago, and everything changed a few months ago, up until a few months ago, was keeping the interest rate on all these government bonds at something like 0.1, 0.2%. Now, suddenly they've, over the last year or so, they've let it go a little bit. And on the 30-year bond, the interest rate is now over 2.5%. But it's still, although they have double the debt, they have half the interest rate, if you see what I mean. But it's going to turn into a problem for Japan now that the interest rate was, let's call it less than 0.5% for Japan for decades, and suddenly it's gone up. But when they were paying that little interest on double the debt, it's not the same thing as the US government paying what they call 2.8%, but will very soon be 4-point-something%. On half the debt, they're paying twice. The USA is paying 4 times as much interest. So I know that people do this comparison with Japan and America, say Japan survived. Yes, they have. But how did they survive? By the BOJ buying the bonds. Now, what could happen in America is that we might get the Federal Reserve stepping in when interest rates start to go beyond a certain point. And when the Federal Reserve steps in, they will have to print money to buy those bonds. There's nowhere else the Federal Reserve can get the money to buy government bonds. So the liability side of the Federal Reserve's balance sheet is the money they printed, the electronic money, and the asset side is the bonds they bought. So when they're invited to or persuaded to, or they just happen to think it's a good idea all by themselves to buy government bonds to stop the rate rising, that's when they start printing and buying government bonds. And that's what they did in the 2008 financial crisis, and miraculously, it happened without any great impact on the rate of inflation. They did it again during the COVID pandemic, and again, it looks like there was no impact on the rate of inflation, except there was for those people who are planning to spend money in their retirement. Because those people who want to spend money in their retirement, saving for their retirement, the things they need to buy in their retirement have been rising much faster in price than the CPI. And I'm talking about things like nursing home care, things like a nice home with a snooty drive, or a center of town apartment near to the shops. I'm talking about the school fees for the grandchildren. Just about the lovely things, the paintings on your wall, the nice things to have, which are in limited supply. Those are the things which are rising in price. And of course, the other area, or the main area where all this surplus money has gone, has not been into the consumer price index, which has been suppressed by the fact that most things you buy are made by robots, not by humans. So the rising labor cost isn't hitting your prices very much. Most of what that money, which has been borrowed by the government and spent, has ended up finding its way into asset prices, home prices, equity prices, Bitcoin, gold, silver, now platinum maybe, and other assets, like if you go to some of the auction sales and see the price of a rare painting by Leonardo da Vinci or something, I'm sure these things would be going for hundreds of millions of dollars, because there's only one of them, and there's going to be at least 2 people with that much money who want it.
Now, when it comes to the end game, I guess what you're saying is more inflation is to come, right? And so for our viewers, looking at the prices of assets rising and gold and silver rising, platinum rising, do you think it's too late to get into hard assets like gold, silver, and platinum, or do you think there's still a lot to run in those areas?
Unlike previous bull runs, the last one being from 2000 to 2010, which lasted a decade, I think this one probably has no ending until we have a new monetary system. So I think this is the final run, but it's not a final run where you can say it will hit a certain price. It keeps going until we don't have the currency which we use to buy gold anymore. And that effectively means that if you ask what the price will be, you'll be asking what the price will be in what will become eventually a defunct currency. Now, how long that takes to happen, I can't tell you, but I think I've been saying to people we're at 5 minutes to midnight, and now people are starting to say to me, well, Clive, I used to tell you you're a fool because it's not going to happen at all. Now I'm telling you you're a fool because we passed the 5 minutes. It's 2 minutes to midnight. So we're definitely getting closer, and we don't know what will trigger it, but if you have a loss of confidence in the currency, what happens? People rush down to the shops to buy anything which will hold its value in the long run. And that doesn't matter whether it's bottles of whiskey or toilet paper or soap or toothpaste. I mean, I was not going to buy things which will expire, but you might, if you start to see a feeling that we're near the end is nigh, that's what people do. They always do. They always go down to the shops and buy everything they can lay their hands on in the hope of preserving their buying power as the currency fails. But, you know, from another point of view, I'd just like to point out the man in the street, I think he's going to be just fine. Because if we have some sort of currency reset, there will be a replacement currency of some sort. And if there is a replacement currency, the small guy will be seen all right. He'll be allowed to have a certain amount of his old currency moved over to the new currency, and therefore he probably won't notice a difference. But if you're relatively well off with some savings, with a pension pot, with some bonds, you might find that you can only convert, I mean, when I say might, I think it's a certainty, you'll only be able to convert some of those savings, and only under certain circumstances, to the new currency. We don't know what those circumstances will be, but you know, there's examples when East Germany merged with West Germany, only some of your East German marks could be changed into the West German marks. So that was a currency reset in a certain sense. That's what, if we do have another one, it won't be the same. We don't know what form it will take. But we do know one thing from history: when these currency failures happen, the losers are always those who own financial assets in the form of the old money, whether that be bonds or bank deposits or loans to their family or their friends or their or businesses. Anyone who's owed money and money terms, it will be owed money which is now has no value or has little value or limited convertibility. So I think what I'd say to people is, if you want to get to the other side, and if we don't know if it'll be a gold-backed currency, it might be, but if it is, if you go in now with a gold coin, and you'll come out the other side with a gold coin, you'll still own the gold. If you go in with cash, you'll come out the other side owning a different currency and whatever you've been allowed to convert, which won't be much.
Well, Clive, we really appreciate your time and insights today. If our viewers are interested in learning more, they can go to your LinkedIn page, which we'll link in the description of this video here. Can you tell us a bit about that?
Sure. I write twice a week articles on the finance and which way the world's going. You know, as you mentioned, the last week or two, a few weeks I've written a few days ago about the silver price, and then a few weeks before that on the platinum price. But I constantly write articles, you know, whether it be stories about the Federal Reserve being insolvent or what the stock market is going to do. I've also got my own YouTube channel, which you probably didn't know. I just started up about a month ago. It's struggling a little bit, but basically I'm teaching people how to make a lot of money in equities. I've been investing money for 50 odd years in equities. I've proven on LinkedIn by publishing my portfolios every year, which every year beat the benchmark. So I've proven that I don't make as many mistakes as I used to. And now I'm teaching people about my ideas about how to buy good investments on the stock market on my own YouTube channel. So if people look for my name on YouTube, hopefully they'll find me. The videos I've done are a bit all over the place, ranging from how to pick stocks which are beneficiaries of artificial intelligence, how to find low-value, cheap stocks or value stocks, how to invest for dividend investing, and so forth. So have a look, and if anyone's nice enough to subscribe or watch it, I'd be really grateful.
Fantastic. Well, Clive, once again, we really appreciate your time and insights today. Thank you so much, and God bless.
This is Kaiser Johnson with Liberty in Finance. With silver's recent spike higher, if you're needing to raise cash, Miles Franklin stands ready to buy your silver at highly competitive buyback prices. Also, with a high spot price and still low premiums, it's a great time to swap from silver bullion into silver eagles and junk silver. And finally, we're also happy to swap your gold into silver while the gold-silver ratio is still high before the silver train leaves the station. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.